No one talks about this in trading.
Alright, get this. All traders trade the same way. For example, you may trade a fair value gap. Another trader sees a key level and takes a breakout trade. The third trader sees a pullback to a moving average. And the fourth trader trades a consolidation breakout. So we basically all see the same thing, just different names for the strategy.
She's absolutely right. Whether you're trading moving averages or doing ICT or SMC or whatever you want to call it, it all comes down to one thing, and that is reading the price. Look, I get it. When you zoomed in on a lower time frame like the 5-minute chart, candlesticks can look like complete chaos.
Brother, what's that? What's that, brother?
But what if I told you that these seemingly random VIX and bodies are actually speaking a secret language? A language that once you understand it becomes your ultimate edge in the markets. And today, I'm going to teach you how to read it in just a few minutes. So give me a few minutes of your time and I'm going to show you exactly how I read the markets even now after 5 years of trading in a very simple way. Let's get into it. Before we do that, let's take a quick trip back in time. Candlesticks were not invented by some Wall Street guru in some high-rise building. They were developed in the 18th century by a Japanese rice merchant named Monisha Homa. Let's think about that for a second. A rice farmer trying to understand supply and demand, fear and greed in the rice markets. So he created these charts to visualize price movement and, more importantly, the emotion and psychology behind these movements. Each candlestick, whether it's red or green, is a snapshot of price over a specific period. Now this could be 1 minute, it could be 1 hour, it could be 1 day, 1 week, and so on. And every single candle tells a story. But here's where most people go wrong. They pile on dozens of indicators. They obsess over obscure patterns like head and shoulders, hanging man patterns, and so on. And they completely forget what the actual candlesticks are telling them. So they end up missing the whole forest for the trees, or in this case, the whole market story for those squiggly lines on the chart. So a candle basically has 4 parts. It has the body, it has the wicks, and it has the open and the close. And before we get into each part, make sure to hit the like button and subscribe to the channel. Now the body is typically the thick part of the candle. It tells you where most of the action happened and where most traders agreed on the price. If it's green, the close was higher than the open, so buyers were in control. If it's red, the close was lower than the open, and the sellers dominated. Now the wicks, these are the thin lines that are sticking out from the top and the bottom. These are very important. The wicks show you where price visited during that period but couldn't stay. It's where buyers and sellers tried to push the price but ultimately got rejected. A long wick usually signals hesitation, rejection, or a trap. And as traders, we don't want to ignore those wicks because they are screaming crucial information at us. Now the last 2 are open and close, and they're pretty simple. They're basically where the price opened and closed for that period. The relationship between the open and close and how it compares to the wicks tells you who was in control during that period, whether it was buyers or the sellers. And finally, the most important thing is that context is everything. A single candle by itself means very little, but when you put that candle in the context of the bigger picture, the trend and the surrounding candles, now it tells you a whole story. So this is kind of like reading a single word in a sentence. You need to actually read the whole sentence to understand the meaning. So on a chart, the price and the candlesticks are telling you a story, and you need to pay attention to that story when trading. So now that you understand what each candle is telling you, let's talk about how to spot those big, juicy power moves in the market. We're always looking for those big, powerful candles. Now we can be fancy like ICT and call this the big candle theory or BCT. My old mentor Oliver Velez calls this the elephant candle, and my trading buddy Nathan calls this the big candle.
This is how I made $1,700 trading gold futures. And you guessed it, another BDC candle, a big candle.
Now whatever you want to call it, they are basically the same thing. It's just one big ass candle. When a massive institution, a hedge fund, or a bank makes a move, it leaves a big mark on the chart. These big candles, especially on the higher time frames, they are screaming at you, smart money is here. And because these big institutions enter with so much money, they cannot hide their footprints. And these results in these big candle prints. And us as little retail traders, we need to spot these things and follow it. So here's one of the biggest rules in trading, and that is to always follow the big candles. So for example, if we have a big weekly green candle, our bias for the next week should also be to the upside, because more likely than not, the next week is also going to be a continuation of that big weekly close. And similarly, if we have a big daily green candle, the next day, more likely than not, is going to follow that same trend. And a big 8-hour close or a 4-hour close, the same thing. If I have a big 4-hour close, more likely than not, the next 4 hours is going to be in the same direction. And that is how I go about my directional bias. So more often than not, these big prints and these big candles are the footprints of these big institutions. And I want to be following that. And it's really all about understanding that these big moves are very calculated. They are made by some big institutions, some very smart people, and they leave a trail. And for us, we need to follow that trail and follow in that same direction. So when you're reading a chart, if you're on a 5-minute chart, you need to zoom out 30 minutes, 1 hour, 4 hour, 8 hour, daily, weekly, and kind of gather all of this information and see what is the price telling you. That's where the real story is, and that's where you want to be. So what gets a lot of traders in trouble, and myself included for the first few years, was that they are too zoomed in into the lower time frames, looking for a particular pattern or something that they study. They have no idea of what's happening on the higher time frames. For example, if I'm doing liquidity grabs, I might be zoomed in on a 5-minute chart and I will see this liquidity grab here, and I will say that this 5-minute has grabbed liquidity. There is a big candle closure. Let's do a long, right? I would want to do something like perhaps, targeting the high over here. But what happens is that when you zoom out to the higher time frames, you realize that this is not a good long, right? I mean, you look at this chart and you look at what's happening to the left, and this doesn't look like a long opportunity. You had all this bearish action, and on the current hourly chart, it doesn't even look bullish at all, right? So you get to see this when you zoom out of the chart. So for me, what I like to do every single day is I like to do a top-down analysis. I like to go on the monthly chart and first see what is the price telling me, right? We talked about candlesticks, and we see that, for example, this candle, this is where the price opened on that candle. In this case, this is a monthly chart. So on that month, in the month of April, the price opened here. It pushed up here at some point, and then it ended up closing over here. So it had pushed down here, it had pushed up here, the price did not hold there, and it ended up closing here, open here, and this is the reason why it's a green candle, right? When I'm coming into this month and I see this monthly chart, I am open to shorts. The reason being, we were on this massive run all the way from early last year, from about March of 2024, and then we hit this ceiling over here. We had this big rejection. Then we came in the next month, we closed doji, we had a rejection again. And then last month in June, we had another rejection from the top. So all of these wicks here are showing me rejections in this area. And we closed pretty bearish last month. So coming in, I am open to shorts, right? So I do like shorts because I see that there is a lot of selling pressure up here. This move on a longer term basis seems pretty exhausted, and it seems like we have found a top over here. So when we come back to the weekly chart, we do see that weekly chart is actually kind of bullish, right? Last week, we did grab the liquidity from the previous month and we closed bullish. So coming in this week, again, I'm open to longs because last week was fairly bullish, right? So this is the tricky thing at the current times, is that each time frame is telling us something else, right? The monthly looks bearish, the weekly look bullish, and when you have the higher time frames that are not aligned, then that's when you get a bit of a choppy price action. Now, when you look on the daily chart, you see that, right? We see a lot of chop. We cannot say whether this area is a long trend or a short trend, right? It's pretty choppy. And when we look a little bit more back, we see that we had a very very nice trend from end of last year all the way up to about mid-April. Then we've been kind of chopping around. So this is what you get to see from the higher time frames. What is the price telling you, right? Before we get into the 5-minute, 15-minute, 30-minute charts, we need to know what is happening. What is the language of the charts telling us here, right? So then, as we talked about the big candles having followed through, this is what I mean. So for example, here we had a very bullish daily candle close. So more often than not, the next day is going to be bullish. And that's exactly what happened the next day. And then again, we had another bullish daily, then another bullish day that followed. So when I'm, for example, coming in on Thursday, April 10th, after such a daily close, I want to be looking for longs, right? I want to try to get the bottom of here and look for more longs. So when I'm looking for my setup, whether that is a fair value gap, order block, maybe I'm doing some kind of a EMA or SMA strategy or a VWAP strategy or a liquidity grab strategy, whatever my strategy might be, there is a better chance of me following this candle than against it. And, same thing here. We had such big bearish daily candle close. The next day, bearish candle close. The next day, bearish candle close. Now, this is not going to be 100%, but it's just more often than not. So you just put the probability more in your favor for that trade that you're taking to go in your favor, right? And the cool thing about this concept is that then you could go down, right? So let's say you have a bullish daily, then you could then look at the 8-hour. And the cool thing about the hour is that the 8-hour candle closes are at the beginning of each session. That's why I personally love the 8-hour and I implement it, is that, for example, this 8-hour candle that was a big liquidity grab and a very bullish close, this happened right before the Monday, June 30th London session open. So when I see that 8-hour closing and I'm coming in the London session, I want to be more long bias, right? Coming into the next 8 hours, more likely than not, longs are going to be better. And that's what's the cool thing about it. So when you see a big bullish 8-hour, the next 8 hours, you could be prioritizing the same direction of the previous strong candle closure. Then you could go down, right? Then you could go to the 4 hours. And my best trades are when the daily, the 8-hour, the 4-hour are on the same side. So all of them are long. And then I look for my entry on the 15, 30 minute or the 1 hour in the same direction. That way everything is aligned, right? But if the 8-hour is bearish and then the 4-hour is bearish, but the 1 hour is bullish, then that inconsistency a lot of times results in a poor trade. So that's why no matter what we are doing, doesn't matter what kind of a strategy you have, ICT, SMC, some kind of a VWAP bounce or a EMA bounce, it doesn't matter. What we need to know is what is the price telling us? Because there is a reason candlesticks were invented, to tell us a story. This is a language. So when we start putting all these different indicators on our charts, then it's very difficult to read it. We often get analysis paralysis by looking at what's happening on the chart, and we forget to read the candlesticks themselves. That's why when we're doing these analysis, it's just best to clear everything and just read the price action from the higher time frames. And then once we have all that information, look for an entry. So there you have it. In just a few minutes, you now understand the history of candlesticks, what each part of the candles are telling you, how to spot those powerful institutional footprints, and how to trade and follow in that direction. Trading isn't about memorizing hundreds of different patterns or putting all of these fancy indicators on your screen. By doing the things that we talked about in this video, you are literally 90% of the way there. Trading is all about reading the market story, and to do that, we need to keep our charts clean and to actually be able to read what the candles are telling us. At the end of the day, that is why the candlesticks were made in the first place. Remember, every candle is telling us a story, and our job is to listen to that story and follow it. So I hope that you enjoyed today's video and you got some value from it. If you did, smash that like button, share it with somebody that you think would get value from it, And if you haven't already, subscribe to the channel, join the family. We are on our way to 1,000 subscribers, and I would love to have you on that journey with me. I'm going to be sharing a lot more of these videos, and definitely let me know in the comment section what would you like to see more of in the channel, and I would love to hear from you. I read every single comment and I respond to every single comment in the channel. So I look forward to hearing from you and to see you in the next video. So until next time, stay sharp, stay disciplined, and I look forward to seeing you there. Peace.